Members, welcome to the meeting of this Bills Committee. It's the appointed time and we have a quorum. I call to order the meeting. Let me first welcome the government officials to attend the meeting. Welcome, government officials. This is about the Inland Revenue Amendment Tax Concessions for Shipping-Related Activities and Physical Commodity Trading Bill 2026. Members, please refer to the relevant papers uploaded to the LegCo website. They include a LegCo brief issued by the Transport and Logistics Bureau on the 10th of June. The file reference is TLB 500-004-003. B. Legal Service Division Report, LC paper number LS36/2026. And C. Background brief prepared by the LegCo Secretariat, LC paper number CB-2018/2026-04. Before we begin the discussion, I'd like to consult members on the following. Do we need to invite views from the public or relevant individuals and delegations? Normally, we can hold a public hearing or invite public views in written form. If members do not have particular views, we would invite the public to provide written submission. What do members think? Written submissions? All right. The Bills Committee will proceed with a discussion on the policy matters. I'll invite Ms. Amy Chan, Deputy Secretary for Transport and Logistics, to walk us through the paper. Members who would like to speak, please press the Request to Speak button. Ms. Amy Chan, please. Chairman, members, good morning. Today, we are here to brief members on the Inland Revenue Amendment Tax Concessions for Shipping-Related Activities and Physical Commodity Trading Bill 2026. Our country's mission is to ask us to enhance our status as an international maritime center, and it is clearly stated in the outline of the 15th five-year plan as well. For 6 years in a row, we are ranked 4th in the international index. It shows that our business environment as well as our overall capacity is ranked among the top of the world. This also shows that our maritime services industry is crucial to our development. We have a diverse maritime services cluster. Currently, there are about 1,200 port and maritime related companies, and this is about a 10% increase compared to 5 years ago. We have highly internationalized services, and they have high mobility. With the fierce competition, we must continue to reinforce and enhance the competitiveness and business edges of the maritime services industry in order to maintain our attractiveness. A favorable tax regime is one major factor in attracting maritime services companies to Hong Kong. In order to promote high-end maritime services. Since 2020, we have introduced a number of tax concessions for the industry, and we have yielded effective results. Given a change of international tax rules in 2024 and 25 policy addresses, as well as in the 2026 budget, we have proposed enhancement to our tax concession regime in order to ensure that after the implementation of BEPS 2.0, we can maintain our competitiveness. At the same time, we will roll out a half-rate tax concession for physical commodity traders in order to drive demand for relevant services. The bill is to respond to the calls, and this is to also inject impetus to the industry. Now I will ask Jeffrey to brief members on the details of the bill. After the briefing, we will answer members' questions. Principal Assistant Secretary, good morning, members. I will brief members on the legislative proposals set out in the bill. As mentioned by Ms. Amy Chen just now, we are a leading international maritime center, and we got the support in the outline of the 15th five-year plan, and we also have the support of our country. For 6 years in a row, we are ranked 4th in the Xinhua Baltic International Shipping Center Development Index. This shows that we are ranked among the top of the world in terms of our strengths in port maritime services and business environment. And this is also a major pillar and a core of competitiveness for us. In order to strengthen our resilience as well as inject new impetus to the maritime services industry, we propose 2 strategies. One, enhancing our competitiveness, and second, enriching the ecosystem. To attract shipping companies to come to Hong Kong, we need a competitive tax regime. There are 2 parts to my briefing, and I will talk about the details of the bill. First, I will talk about enhancing the tax concessions for related shipping activities. Before I go into the details, I will first talk about the existing tax concessions for the shipping activities. There are 5 categories. First, shipping lessors. They lease their ships out to the relevant parties and they collect fees. Second, ship leasing managers, and they provide management support to the relevant parties. Third category, shipping agencies. They are the agents as well as lessors as well as representatives, and they help shipping companies or relevant parties deal with the affairs. Fourth category, they are shipping managers. They provide ship management services to ensure that vessels can sail smoothly. Fifth category, ship brokers. They provide brokerage services to lessors or buyers to facilitate transactions. The third to the fifth categories, that is agents, managers as well as brokers, they are the principal parties. From 2020 to 2022, we've rolled out a number of tax concessions. For example, we have given full profits tax exemption for qualifying ship lessors, and also for commercial principals, we have also rolled out tax concessions for them. These measures have been effective. We see that the number of beneficiaries increased from 11 to 64 from 2020 to 21 to 2023-24. It is a 5-fold increase. This bill is to ensure that we can cope with the changes in the international tax landscape. The OECD, in order to cope with base erosion and profit shifting risks arising from the digitalization of the economy, it formulated a new tax reform package. Starting from 2025, we started implementing BEPS 2.0 in Hong Kong. For those MNEs with an annual turnover of 750 million euros, they'll have to pay a global minimum tax at the ETR of 15% in Hong Kong. In order to ensure that we can maintain our competitiveness after the implementation of BEPS 2.0, we propose the following enhancement measures. We propose enhancing 4 tax concessions for shipping-related activities. We propose to expand the meaning of the term ship leasing activity used in the IRO. For funding leases and operating leases, they have to exceed 1 year. For qualifying shipping-related activities, for example, ship management activities, and the relevant lessors, they'll have to fall under the 3 categories. They'll have to be ship lessors, ship managers, as well as ship operators. In order to allow for a more flexible mode of operation, we propose to cancel the requirement of 1-year restriction for operating as well as funding leases. Also, in order to facilitate the compliance of MNEs in paying the 15% ETR tax, we propose to implement an additional option of a 15% concessionary tax rate on the premise of maintaining the original concessionary tax rate. This will allow MNEs to elect the 15% concessionary tax rate as they comply with the tax rules, and this can also help simplify the globe calculations for these MME groups. That way, we can help lower their compliance costs and enhance the flexibility of their mode of operation. The mode of operation of companies may change every year. Therefore, we will allow companies to pick the tax rate every year. We will adopt a more lenient threshold requirement. That's about half of the existing threshold. Also, for shipping lessors, there will be a new tax deduction. We will introduce tax deduction on ship acquisition costs for ship lessors under an operating lease, replacing the 20% tax-based concession. This will offer support to these companies and make sure that we are in line with the international tax landscape. Ship acquisition costs incur a large amount of money. We believe that the tax concession can offset the first 5-year profit of the relevant enterprises. Also, to ensure diverse financing modes, we will offer tax deductions for relevant interest expenses. First, we will relax the relevant tax rate for those who lend money overseas. Also, for relevant interest expenses incurred in lending money in places outside Hong Kong, they will also get a tax break. At the same time, we will introduce a half-rate tax concession for physical commodity trading activities. There are 3 major types of physical commodity for trading: metal, energy and industrial materials, as well as agricultural products. So commodity trading is an important part of the maritime services industry. By rolling out the tax concessions, it can enhance the industrial chain development in Hong Kong. And this will also help us enhance our competitiveness, and it will help us achieve the vision of being a global maritime capital. And this can place Hong Kong in a more competitive position as compared to other major maritime hubs like London and Shanghai. We propose a half-rate concessions for physical commodity traders in order to attract them to set up or expand their business in Hong Kong, thereby injecting demand and impetus into the maritime services industry. The proposed tax concessions will apply to accessible profits of qualifying traders. That means the activities will have to be conducted in Hong Kong. For profits earned by physical commodity traders, they'll enjoy the tax rate at 8.25%. Also, there will be a 15% tax rate option for these enterprises so that they can pick the tax rate every year. Also, we will introduce a schedule to the bill to define qualifying items. Currently, there are 55 items of physical commodities, and they cover most of the commodities traded by sea and land transport. We will consider whether the items are transported by sea or by land and whether they are involved in active trading when we decide whether to increase items to the schedule. We will have to make sure that these items can drive the maritime services industry.
Under the tax concession regime for physical commodity trading, there would be a list of commodities, and then there must be physical commodity trading, and then the deal making must happen in Hong Kong before it is accepted as qualifying trading activities. And then there must also be certain thresholds that need to be met. For example, first, there must be a minimum trading volume each year, and the total income must not be less than 7 million Hong Kong dollars. And then we have considered other tax concession schemes, and then the businesses must meet the economic entity requirement. That is, they must hire at least 3 employees, and they must incur at least $3 million Hong Kong dollars of operating expenses. And then for other and then the arrangement would be the same for other overseas businesses. And then and also they must also use Hong Kong service providers and suppliers. In the first, there's 2 scenarios. First one, now if there is only incurring of expenses of one particular type, at least 30% of the aggregate specified expenditure it has to be incurred on services provided by Hong Kong-based service providers. But if there are more than one specified expenses, then the first one is if the specified expenditure is incurred only on services provided in connection, then at least 30% of the specified expenditure is incurred in Hong Kong. And if there are more than one specified matters, then at least 30% of the aggregate specified expenditure is incurred on services provided by Hong Kong service providers, or at least 50% of the specified expenditure is incurred in connection is incurred on services provided by Hong Kong. As for example, warehousing expenses and other land transport expenses, this could be counted for deduction, for tax deduction. So for the tax concession for physical commodity, there are 3 major elements to help us achieve our policy of promoting the development of the maritime industry. First, now most of the physical commodities are traded through sea route, and secondly, the contract must be executed in Hong Kong. This is to make sure that the activities are carried out in Hong Kong. This will bring about high value added trading in Hong Kong. And then thirdly, when overseas services are used, then they must meet the minimum specified expenditure limit for using services in Hong Kong. This again will help to promote the development of maritime services in Hong Kong. Now, we expect that all these measures will make sure that Hong Kong maintains its international competitiveness. After the implementation of BEPS, it will also reinforce our strengths and attractiveness in terms of the business environment. And then our study shows that these measures will be very attractive to bring physical commodity trading to Hong Kong. And with the half-rate tax concession, it could bring about around 4.6 billion Hong Kong dollars of economic benefits per year to Hong Kong. The bill covers all the legislative proposals I just explained, and there are two main parts. The first one is to enhance the existing tax concessions regimes for certain shipping-related activities, covering the 5 activities I mentioned. And then the second part is to provide for a new concessionary tax regime for qualifying physical commodity trading activities. This is a new arrangement. And then this will apply to the year of assessment on or after the 1st of April 2025. That is in line with the implementation of the Inland Revenue Ordinance. There are 26 clauses, and then to effect the new arrangements, and there are other clauses also to bring about textual improvement and so on, or consequential amendments. I will explain them in detail when we come to the clause-by-clause scrutiny. Thank you. Now, the 3 representatives from the Inland Revenue Department encountered a traffic accident in Kowloon, so they will be late. I don't think we need to wait for them, right? Now the floor is open to questions. 8 members have asked to speak. Mr. Tommy Chung, Captain of the Lam, Miss Christine Fong, Mr. Andrew Yao, Mr. Andrew Fan, Mr. Ray Wong, and Mr. Jonathan Lamport, and myself. That's the first round. 5 minutes each for questions and answers. First, Mr. Tommy Chung. Thank you. I fully support the proposed amendments. I believe they could bring about commodity trading to Hong Kong, but then the tax avoidance, measures to prevent tax avoidance and so on, and the BEPS, they would actually affect Hong Kong in some way. So that's why I have 3 questions. First, about the support measures. Now, the bill asks that the qualifying parties must meet 2 requirements. Either requirement, at least 30% of aggregate specified expenditure, at least 50% of specified expenditure on services provided by Hong Kong. Now, what if there is some warehouse service and for shipping onward to other places? So does that meet the requirement of procuring services in Hong Kong? And then the 7 million Hong Kong dollars threshold. Now there are not much physical commodity trading activities. So the bill requires that for qualifying traders, from the qualified income, it must be no less than 7 million Hong Kong dollars, or there must be no less than $3 million of operating expenses per year. So what about the medium-sized traders? They may not qualify. So what is the basis for such a threshold? Would you consider lowering the requirement? And the third point, BEPS. Now there's a 75% of profits and assets tax and so on. I think this is to prevent tax avoidance. But then there are major groups. They may run different services. They have real estate services, shipping services, and banking services, and so on. So it may not be more than 75% of the group's profits. But what if a single company in the group meets that requirement? Then does it mean that it passed the test? And then for the tax concessions, we have said many times that hopefully it could extend to local warehousing services and land transport services. I'm sure you've heard our views before, so thank you. Ms. Amy Chan. Now, if you go through an agent to reserve warehousing space that is covered, and there is a requirement let's say if you have operating income, of course you will want to declare operating costs and or expenses. And in one of the slides, we have said that there are 3 steps to make sure that when we consider the effectiveness of the requirements for maritime services, qualifying services, that first you must execute the contract in Hong Kong, and secondly, the commodities must be transported mostly by sea, and first is the threshold for expenditure. There are two options. That is, if there's only one specified matter, then 30% of the expenditures suffices. If it's more than one specified expenditure item, then it's either 30% of the aggregate specified expenditure or at least 50% of the specified expenditure. This is to allow flexibility. And with this design, we've actually approached commodity traders in Hong Kong or potential commodity traders overseas. We've asked them and they accept this arrangement. So hopefully with this flexible approach, and at the initial stage of implementing the tax concession, and if there are certain other sectors in the ecosystems that may eventually also see expanded business, then we could review the threshold. Now, the $7 million threshold, we look at our competitiveness. Our competitor in such as Singapore in the region has a threshold of $1 million US. So our threshold is slightly lower. So it's a matter of considering our competitiveness. And then we agree, we understand that for this threshold, for small, medium, and large-sized commodity traders, they may look at it differently, and we believe with the $7 million is about right for our competitiveness. And Inland Revenue Department colleagues are on their way. We can ask them about some tax avoidance measures. Requirement for a single company and a group, this tax avoidance arrangement is allowed, and we have already enhanced the tax measures, and we see that some companies actually put aggregate businesses or to reassemble their businesses so they meet the requirements. So it doesn't present a problem. Next, Captain Lam. First, thank you. I declare that my work's involved with ship leasing and commodity trading. I support the bill. That is the Inland Revenue Amendment Tax Concessions for Shipping-Related Activities and Physical Commodity Trading Bill 2026. It's because the amendments will bring about will promote the development of high-end maritime services in Hong Kong. Then it will also benefit the maritime legal services and other services in Hong Kong. Now, I'm in the business, but I have a number of questions because I represent my functional constituencies. We want to express certain concerns. The first question. There are 2 parts to the bill. The first part is to enhance existing tax concessions for shipping-related activities. Last year, BEPS 2.0 was implemented, so we have Hong Kong minimum top tax, and there's need to pay 20% for 20% tax base concession. So, for example, with ship leasing, it's been reduced from $7.8 million to $3.9 million. If Hong Kong and other countries all adopt the minimum top tax arrangement, top-up tax arrangement, then it's good to offer more concessions in Hong Kong. There are now over 1,400 such businesses operating in Hong Kong. So how many companies actually have an income of 7.5 million euros? How do we compare with Singapore in lowering the requirements? And second question is about the physical commodity trading. Do you have statistics about the commodity trading in the past few years? What type of commodities are they? I understand it's mostly gold, precious metal. precious metal covers gold, copper, and silver. But then there is already tight supply of warehousing space. For LME accredited warehouses, there are just about 15 of them in Hong Kong. So if we bring in the half-rate tax concession, then there may be more metal trading activities attracted to Hong Kong. So do we need to provide more warehousing capacity for metals? So there's need to provide more support measures, or you could work with the Lands Department to relax the land use of industrial buildings, for instance. Now, with the half-rate tax concession, there will be revenue foregone. And so that means there will be trading volume of about $1.2 billion. And then for qualifying companies, they have to have at least $7 million of income. We know that with this new tax concession, we want to make Hong Kong more attractive. We want to bring more commodity traders to set up bases in Hong Kong, and also to bring in more commodity trading. There are about 40 plus commodity traders in Hong Kong. What is the scale of their business, and what is have you approached them? Do they have any intention to expand their business? And is there any expression of interest by other commodity traders for coming to Hong Kong? Now, you expect the half-rate tax concession could bring about $4.6 billion of economic benefits. How is that arrived at? There are many questions.
Gazetted.
Deputy Secretary, I thank the member for his support. The member asked how many companies will be able to enjoy the proposed tax concessions. Back in 2020 and 2021, we started rolling out the tax concessions. As mentioned, there are ship lessors, ship managers, agents, brokers. There are in total 81 companies that applied for the tax concessions, of which 67 are covered under BEPS 2.0, so it covers a broad scope. The 15% rate option will facilitate the compliance of these companies. In terms of physical commodity trading, as far as I understand, the ecosystem has been building. There are mainly delivery of metal commodities. And we only started having this kind of warehouses last year. We see that the market has been vibrant. It is the CEDB that provides land for warehousing of LME, the FSTB that provides the land. And we also are part of the strategic committee chaired by the FS, so please rest assured we will definitely build this ecosystem together. In the past, we have revenue collected, and we believe that with the tax concessions, there will be $100 million of revenue foregone. And it is only when companies earn a profit that they will be able to pay tax. According to our studies, well, we have interviewed local and overseas potential commodity traders, and we've got positive feedback from them. They said this proposed regime is competitive, and we've got feedback from 30 to 60 overseas and local companies. They say they are willing to set up operations or expand their businesses in Hong Kong. So please rest assured, upon the passage of the bill, we will ensure there will be publicity as well as support measures. There are two questions unanswered. Will there be more storage facilities? Yes, we will talk to the FSTB about this. Is the $4.6 billion an optimistic estimate? Well, we made this estimate last year, and according to the industry, this is a conservative estimate or even an optimistic estimate. We will closely monitor companies that take part in the regime, and we will better assess the economic benefits. Just now you talked about compliance costs. Under BEPS 2.0, if there's a reduction of 15% tax, what will be the compliance costs that will be saved by companies? It depends on the scale of the companies. We consulted companies on the market. I believe it will be up to $6 to $8 billion euros, 0.6 to 0.8 million dollars of euros. It may not be a huge sum for a large company. However, I think companies would like to save as much as possible. And it is not just about money saved, it is also about streamlining the work procedures for companies. So companies will benefit. According to the feedback of the industry, this is a competitive regime. However, Singapore will be made aware of our regime. I want to know, after they know about this regime, have they rolled out any tax concessions? After the implementation of BEPS 2.0, Singapore has already reformed their commodity trading system, and we made reference to their system as we came up with our system. We remain cautious because we do not want to be surpassed by Singapore. Our business environment is good, and we have a transparent tax regime. For Singapore, it is an administrative measure. It is a relatively less transparent system. You do not know how much companies can save under their tax system. However, we are complemented by European companies that we have a transparent and stable tax regime. This is our advantage, and we will continue to monitor the situation of our competitors in the region. It is true that in Singapore, the 5% tax concession has been maintained. Yes, we are aware of that. Next, Ms. Christine Fong. Chairman, I support this Inland Revenue Amendment tax concessions for shipping-related activities and physical commodity trading bill. We need to reinforce our status as an international maritime center, and therefore we are lowering the tax for relevant companies to 8.25%, and according to the government, it will bring about $4.6 billion of benefits. This is an aggressive measure. For $100 million of tax to be paid, if it is reduced to 8.25%, a large amount of money can be saved. For Singapore, I see that they have 5%, 10%, and even 15% for their tiered tax system. Depending on their administrative measures as well as commodities traded, the tax rate applied may be different. With this proposed half-rate tax concessions, will we be more competitive compared to Singapore? How will you assess our performance? And if Singapore adjusts their tax rates as well, what will happen? According to you, in mainland cities such as Shanghai, there are no such tax concessions. Upon the passage of the bill, if Singapore follows suit, how long would it take for you to adjust our tax regime accordingly? For commodity trading, as mentioned, metal mine commodities are traded. In terms of green methanol, well, with the war going on now, I want to know if there are any statistics showing the trading of green methanol. According to the TLB, green methanol are transacted between ships and vessels. How much of a share of the green methanol is in our market. With the war going on, will you further promote the trading of green methanol? Also, IOMED established its headquarters in Hong Kong last year. There were 388 arbitration cases involving $15 billion. With more of these maritime services related arbitrations, will you bring in more arbitration organizations to Hong Kong? Deputy Secretary, we look at economic benefits as well as tax revenue separately. With a $100 million of revenue foregone, we will at the same time see $4.6 billion of economic benefits, and that will cover different economic activities. We believe that it will be a good investment that will benefit all sectors of our society. How did we come up with $4.6 billion of estimate? We talked to the relevant companies. We asked them how much investment they will make and whether they will expand their businesses, and we came up with this figure according to their reply. So we think this is an aggressive estimate at first, but according to the industry, this is a conservative estimate. In terms of the tax system in Singapore, there are 5%, 10%, and 15% tax rates. The 10% tax rate is the global minimum tax rate, and we learned from their experience as we roll out the enhancement in Hong Kong. I reached out to some shipping companies in Singapore. Only those with a very large scale of business will enjoy 15% of tax rate concession, and these companies are under BEPS 2.0, so they'll have to pay 15% of tax anyway. We have to maintain our competitiveness in terms of our business environment. We are highly transparent in terms of our tax system. We have competitive tax concessions. According to international companies, we have a stable supply of talent. We have various talent admission schemes, for example. Therefore, these shipping companies will want to come to Hong Kong. Singapore is one of our competitors, and they change their policies from time to time. And they do not have enough imported labor, and that's why there is competition between companies. So in this regard, companies think that we are doing well. We will promote our tax concessions, we will put in place support measures, and we will continue to improve our business environment to support the development of the maritime services industry. Commodities include green methanol. It's one of the items on the list. As long as the traders can meet our threshold in terms of their annual turnover, they will be able to enjoy the tax concession. In southern China, there are more and more fuel companies, and they have expressed interest in holding trade in Hong Kong. They do not directly export or transport the items in Hong Kong, but they are willing to be here to conduct their businesses. There is one clause in the bill that's about arbitration. We will ask companies to state in the contract that the place of arbitration is Hong Kong in order for them to have their expenditure incurred covered under the tax concession regime. Mr. Yu Chou-fai, I declare that I'm a director of a shipping group. It is not an independent director post. Instead, we are there to supervise and monitor the company. Under the National 15th Five-Year Plan, the positioning given by the central government is to enhance the shipping center as well as the transport sector in Hong Kong. It is rightly pointed out in the paper that there are ferrous metals and non-ferrous metals being traded, and they are one of the three major commodities traded in Hong Kong. They account for half of the physical commodity trading market. This proposed tax regime can help drive various services industries in Hong Kong. What is more important is that we have the backing of our motherland. Our country is the biggest consumer of physical commodities in the world. So compared to our competitors like Singapore and South Korea, we can closely cater to the needs of the market. For futures transaction as well as physical commodity trading, I want to know if you have thought about storage. Futures trading as well as physical commodity trading go hand in hand. Large-scale companies, they use Taobao, and so as well as hedging LMEs. In this regard, Shanghai has been doing well. They do physical commodity trading as well as deliveries futures trading. I want to know if we will work with the international futures exchanges. Deputy Secretary, I thank Mr. Yu for the support. For physical commodity trading as well as associated trading such as deliveries futures, it will be covered under the tax regime. For purely futures related trading, they will not be covered under the tax regime. That's the difference. The purpose of this bill is to drive and inject new impetus to the maritime services industry. So we cover physical commodity trading activities. This is the first concession for physical commodity trading, and there will be a positive effect for other parts. The entire government will work to enrich this ecosystem. You mentioned that delivery futures and physical commodity trading will go hand in hand, and I believe the future direction is for us to collaborate with mainland or international platforms. I hope that with the ecosystem continuing to grow, we will work towards this direction. I'm not from those bureaus in charge of this, but I would like to express my gratitude to the member.
Well, if I could say a bit more, there are 55 items in the list that we've actually exchanged views with Mr. Yao before. Well, you can rest assured that if the industry thinks that the list doesn't cover some of the items, we will try to include more. If, say, in future there are new types of metal, the metal trading has reached a certain extent that it should be covered in the list, we are more than happy to update the list immediately. Thank you. Thank you. We are talking about the 17 FE list, right? If I may ask the question, now there are 55 items in the list that copper is included. What about recycled copper or regenerated copper? Regenerated copper is still copper. Well, you know, the items we cover have are really flexible. Whether it's copper or regenerated copper or whatever, it's fine. Now, I know there's the regenerated metal is a different kind of trading. Anyway, yes, I get that. Thank you, Mr. Andrew Fan. Let me declare interest. I'm a non-executive director of Costco. I think most people in the trade support this bill. I support the bill too. I just want to clarify certain issues. Mr. Tommy Chung said at the start of the discussion, paragraph 16, there's mention of certain there is insufficient there's not ample supply of certain types of maritime services in Hong Kong. So with this tax concession, would it lead to even tighter supply, and then costs or service costs may go up, and that will act to the operating costs of the relevant operators? So will there be supporting industrial policies, for example, expanding the training of talents and so on? Because otherwise, businesses may not be able to meet the requirements, and then they can't enjoy the tax concession. That's the first question. Secondly, in paragraph 20 of the legislative brief, we need to align with the implementation timetable of the Inland Revenue Amendment Ordinance 2025, blah, blah, blah. And then, so it's recommended that the concession should apply to the years of assessments beginning on or after the 1st of April 2025. Now, usually the end of financial year is the 31st of March 2026. That's the first year of assessment. So have you already prepared the relevant administrative guidelines or other mechanisms so that you can address the concerns of businesses with compliance and so on? Or would you be a bit more relaxed initially in the implementation? Let's say there's a listed company, the end of the financial year is the 31st of March, and so before the 31st of July, the performance has been announced, and then maybe they can't then meet the requirement. Do they have to make any changes or so on? So how do you deal with that? Another point, Mr. Yao mentioned 17 FD. If there are new physical commodity traders who want to come to Hong Kong, would want to join the list, do you just need to use subsidy legislation to amend the schedule? And maybe there will be increase in demand for warehousing, supplies, provision, and so on. So with the tax concession, maybe there will be additional demands for physical services. Have you catered for that? Thank you. Now, our maritime services is highly internationalized and very mobile, with high mobility. So, ship companies will go where the commodity traders are. So that's why we need to bring commodity traders to Hong Kong. And when these companies come to Hong Kong, there are companies that provide maritime services. They will also come to Hong Kong. Maybe they are using certain companies. They don't initially have offices in Hong Kong, and then these companies will also set up offices in Hong Kong. And that's something we look forward to. With talent training, I agree with you. We have a talent attraction policy, but we want to develop Hong Kong into an international maritime center. We take very seriously talent training. And that's why in June we submitted a paper to the Economic and Commercial Development Panel to explain what our arrangement is, and if necessary, we will step up our effort in training talents. And then on preparing for tax return and so on. So what needs to be done now? If physical commodity traders want to join the list in Schedule 17 FE, yes, we only need to update the schedule through subsidy legislation by negative vetting. So it's very easy to make the change. Perhaps my colleagues from the Inland Revenue Department could explain that, and or tell us how prepared they are with the change in the tax regime. Thank you for the questions. We are now preparing the administrative guidelines. When this bill is passed by LegCo, then we will upload the administrative guidelines to the IRD website. We know that the audits will come into effect in 2025-26, so companies may have to submit tax returns soon, and they don't need to be too worried, because in their tax return they can tell us that they want to elect, say, the concessionary tax rate for qualifying commodity traders, or if they don't mention it in the tax return, later they can always write to the IRD to apply for the election. Thank you. Next, please. Mr. Mr. Ray Wong. Now, thank you. I support the bill, Hong Kong, so that we could meet the requirements of the 55-year plan to develop Hong Kong into International Maritime Centre. But then I see two issues here. I want to point out that with tax concession, it's tied to a specified expenditure that actually ignores reality in business operation. In the commodity trading market, there are certain multinational enterprises. They are the dominant businesses. So usually the other receiving end, they don't have any right in deciding with the insurance coverage and so on. And then so with commodity trading, is usually high volume involving only low level of profit. And that's one issue you need to consider. And then and Hong Kong is just an entry port. If it's a 20-foot container, TU, then the cost is 2 times or 3 times that of Shenzhen and Nansha and so on. And then if we want to tie the specified expenditure to local logistics expenses, that means certain business will be phased out eventually. So I think we should have a CIF contract arrangement. So as long as we can prove that the transactions shows that the qualifying businesses have no control over logistic arrangement, then it should be should not be it should be considered as meeting the requirement. And then as long as we engage as the businesses engage local insurance agents, and it should be deemed as meeting the requirement. And then we could look at Singapore's case. No, as long as businesses rent offices here, they hire auditing staff, they have they buy financial products here and so on, then all these expenses should be counted as local expenses, and then that will allow them to qualify for the tax concession. Thank you, Mr. Wong. Let me explain the situation with commodity trading. Usually, commodity trading or shipping is done by bulk trading rather than container shipping. Now, for metals, yes, they may be transported in containers, but in most cases, commodities are transported as bulk commodities. So that's why with the tax concession arrangement, we leave it to companies to decide how they could make use of the concession or not. As for a high logistics cost in Hong Kong, well, our maritime services target global shipping, and then some commodities actually don't come through Hong Kong. So if we just look at TXC for goods loaded at Hong Kong ports, it may not be the right indicator. The purpose of the tax concession regime is specific. We want to promote the development of maritime services. That's why our policies have that in mind. Now, with the development of the ecosystem of commodity trade in Hong Kong, can we expand the measures to cover other types of commodities? Well, I'll be happy to see that. But as I mentioned, the operating costs of commodity trading, now whether they use warehousing services or transport services in Hong Kong, as long as it's local expenditure, it could be included for the purpose of tax concession. Mr. Wong mentioned CIF clauses. That's actually rather commonly adopted. And it is they consider an aggregate price So sometimes it may be hard to attribute how much of the price goes towards insurance or shipping or whatever. If at the end it's considered as shipping related expenses, then do they have to do a detailed breakdown? No, they don't need to do it because it's an aggregate price, so there's no need for breakdown of the different service costs, and so it doesn't apply. Because if it's CIF, if the contract is on a CIF basis, that means it's one price covering everything. Then that one price is the cost of that commodity, and there's no need to give a breakdown of the cost because that's the price structure. So you accept that then? Yes.
Mr. Jonathan Lamport. Thank you, Chairman. Our chamber supports this bill. By promoting physical commodity trading, it can drive the maritime services industry. I would like to ask about the following. The government has listed out 55 physical commodity items that can benefit from the tax concession. It covers 23 metal mine commodities, but it does not cover gold and silver. Well, I understand gold is transported by air. And there is this strategic committee of commodities led by the FS. Silver has industrial use. It is different from gold. If you look at this from physical commodity trading perspective, if we can promote silver trade, it will benefit the market. And we have traders locally that have a certain scale of business. I want to know if you will consider including silver into your qualifying physical commodity items list. On the question about silver, we'll have to look into this. The Principal Assistant Secretary gave a PowerPoint presentation just now, and we propose 3 strategies for developing the maritime services industry. We have to first look at whether silver is transported by sea. If it is, then it will be one of our target commodity items. Next, Mr. Peter Xu. Thank you, Chairman. The Liberal Party supports the proposed tax concessions. This direction is in line with that of the National 15 Five-Year Plan, which clearly states that we have to reinforce our status as an international maritime center. The proposed concessions can bring about a lot of benefit to Hong Kong. And this will allow us to better compete with competitors like Singapore. I see that you have to meet certain requirements in order to benefit from the proposed concessions. If you want to enjoy the 8.25% of tax rate, you have to employ 30 staff, and each year you have to make a $3 million turnover. For a 15% tax rate, you have to employ at least 1 staff with an annual turnover of $1 million each year. The 15 tax rate is a tax break, right? How come you are asking these companies to employ a lower number of staff? Deputy Secretary, I thank the member as well as the Liberal Party for their support. For 8.25%, it is a lower threshold. It is a lower rate. That means you have to meet a higher threshold in order to enjoy the tax concession. The 15% is a basic tax rate under BEPS 2.0. For an appliance company, no matter what their profit is, they'll have to pay a 15% tax. By rolling out this concession, we are trying to help companies streamline the work procedures. If you enjoy a lower tax rate, you have to meet a higher threshold. For those who enjoy an 8.25%, if we implement a lower threshold, that will be against the spirit of this bill. That's why for those that enjoy a 15% tax rate, they'll only have to hire one staff and make a annual profit of $1 million. For those that enjoy a better tax rate, they will have to meet a higher threshold. So you're asking these companies to hire local staff? Yes. That's good. Dr. Ben Chen, the DAB supports this bill. Physical commodity trading as well as maritime services development are integral to the development of Hong Kong, so we're all for the proposal. I'd like to learn about the following. Upon the passage of the bill, if we are to compare ourselves with neighboring places like Singapore, how competitive are we? How will we fare with Singapore? Are there any market researches done that show us how many companies will be able to attract after the passage of the bill? On physical commodity trading, I'd like to ask the IRD. The accounts involved in commodity trading are very complicated. Is there enough manpower and experienced officers under IRD to deal with these complex financial accounts? After the implementation of the concessions, if there are companies in Hong Kong that make false declarations or relocate their businesses elsewhere, will there be a mechanism to recover taxes? Deputy Secretary, I thank the DAB for the support. Upon the passage of the bill compared with our major competitors like Singapore, how will we fare? Take Singapore as an example. In Singapore, there are the 5%, 10%, and 15% tax rates. For 15 tax rates, they are in line with the minimum tax rate under BEPS 2.0. And in this sense, we align with Singapore. We are rolling out a 8.25% tax rate. As far as I understand, in Singapore, if they're going to implement the same tax rate, the companies will have to meet a very high threshold. We interviewed companies with great potential, and according to these companies, an 8.25% tax rate is very attractive. According to the figures and information we collected from these companies, we believe that there will be 30 to 60 companies that will expand their businesses or establish presence in Hong Kong, and they will together bring about $4.6 billion of economic benefits. They will hire about 280 staff in Hong Kong. They're all high value-added professionals with high income. We're not only comparing ourselves with Singapore, we're also going to look at our business environment. We have a highly internationalized environment. We have a stable and transparent business environment. Our tax concessions are clearly stated in the law, and companies that want to enjoy the tax rate will not have to apply for that. In Singapore, companies that want to enjoy a tax concession will have to make an application. I believe the accounting sector will be very familiar with the difference between Hong Kong and Singapore. In terms of the manpower of the IRD, I'll ask the IRD to reply. I thank the member for the questions. Currently, there are physical commodity traders in Hong Kong, and our colleagues have been reviewing the financial statements submitted by these companies. In future, after the implementation of the proposed tax concessions, we will ask our senior staff with experience to go through the accounts. So please rest assured. In terms of the design of the proposed tax system, we will put in place laws to combat tax evasion. Transfer pricing rules under the OECD will have to be complied with. That means any transactions with associated companies will have to comply with the arm's length principle. We'll also put in place tests. For those who make use of this tax system for tax evasion, they will not be able to enjoy the concessions. We ask companies to be established in Hong Kong to meet the economic substance requirements. That's all from me. Any follow-up questions? Next, Dr. Webster. Thank you, Chairman. There are a number of bills this year that has to do with our tax regime. There are about 3,000 staff under the IRD, so I think the IRD can consider enhancing manpower. Now I'm looking at paragraphs 26 and 27 of the paper. According to your model, every year you'll get $4.6 billion of economic benefits. With the half-rate tax concessions, you'll have $100 million of tax revenue forgone every year. Are you talking about the GDP contribution or tax contribution? By $100 million of tax revenue forgone, I believe you made this calculation based on 40 physical commodity traders. I'm not sure if you have taken into account the 30 to 60 commodity traders that will establish presence in Hong Kong. With the 15% tax rate under BEPS 2.0, well, you will have an additional 15% option for companies that are qualified. I want to know if you will actually gain more tax revenue with this new tax concessions or new option. Now, on actual operation, as far as I understand, transactions of physical commodities mainly take place in Hong Kong. For back-end operations like settlement and risk management, they're often outsourced to contractors. If the operations have to take place in Hong Kong, well, I want to know what kind of proof will you ask companies to submit in order for them to meet the requirements if they outsource the services to places outside Hong Kong? If the contractor or the department responsible for the services are not located in Hong Kong and they simply follow the instructions of the group, then they may not be able to meet the economic substance requirements in terms of the number of employees they hire. That is, they won't be able to comply with number 5, number 7, number 70F under Schedule 17A. This may be confusing for the relevant sectors, so I want to hear from the administration on this. Deputy Secretary, I thank the member for the support. The $4.6 billion are in GDP terms, not tax revenue. You're right, we came up with this estimate based on our interview with enterprises. We believe that with the proposed tax concessions, we'll be able to enjoy extra tax revenue. As to the exact amount of tax revenue we will gain, we'll have to continue to monitor the situation to come up with an estimate. Now I give the floor to the Principal Assistant Secretary. On the outsourcing of services, qualifying traders currently are allowed to outsource certain services. However, the outsourced services will have to be carried out in Hong Kong. Any follow-up questions, Dr. Ng? No. Next, Professor Alex Fan. I thank the administration for the briefing. I have a legal background, so I'm concerned about the legal operation aspect. First question, about costs of arbitration or other legal costs, as well as the relevant tax deductions. Currently, for profits tax, if the legal expenditure or the arbitration costs have to do directly with the company's businesses, whether it is assessable profits or profits incurred, they can enjoy a tax break. Now, with the proposed tax concessions, I want to know if this will still apply for physical commodity trading. If the qualifying traders use the legal services or arbitration services in Hong Kong, will they still enjoy a tax break? Second, will the government be more aggressive on deciding whether a company enjoys a tax concession? Will you ask the company to use Hong Kong's arbitration services? That is, you have to ask the company to use Hong Kong's court in dealing with the litigation as well as arbitration in order to enjoy the tax concession. This is because we want to have companies make use of these services in Hong Kong. Say a trader comes across certain legal disputes, we want them to make use of the arbitration services in Hong Kong.
Thank you, Professor Fan. On spending deduction, you're right, but the tax concession goes further than that. With maritime legal services, they are part of the specified services. If there are expenses incurred, then there will be certain requirements, maybe at least 30%, or for one specified matters, more than 50%, they must use the Hong Kong services. And then when we go to clause by clause scrutiny, you see the way we draft the bill. There is a special paragraph on arbitration. We have actually consulted the industry, and because arbitration is separate from maritime legal services, so how do we include arbitration in the bill? We require that they must state that the seat of arbitration in a contract must be in Hong Kong. Because there could be many circumstances with arbitration. There are certain disputes that may not be resolved in Hong Kong, but in the contract it must be stated that the seat of arbitration is Hong Kong. This is a requirement. So this is something we require in the bill. So that is a very specific measure that will bring arbitration cases to Hong Kong. Next, Mr. Lam Wai Kong. Thank you. I support the bill, the tax enhancement, so to consolidate our position as an international maritime center, and then that will also help to create more jobs for Hong Kong. Now, I'm particularly concerned about manpower resources. The Deputy Secretary said just now that here we are talking about high-end jobs in the maritime industry, and there will be a series of training courses, according to the Deputy Secretary. But then it's a requirement that there must be Hong Kong service providers, Hong Kong-based service providers. But then, is there any requirement on whether the employees have to be local employees? Can I find out more? Maybe with Hong Kong-based service providers that includes talents engaged by the company, and then these are local talents or professionals. Is that the case? And then on half-rate concession, 8.25% free employees, 50% at least one local employee. Could you consider increasing the number of local employees, maybe at least 3 or more local employees? So those are my questions. Thank you. Ms. Lam's concerns about labour issues. Thank you, Mr. Lam, for your support. Now, we as we provide a tax concession, we must follow an underlying principle, that is, it has to be a simple tax regime. So even if we offer tax concessions, we can't make it too complicated. Now, Mr. Lam mentioned limiting services to be provided by local employees in a Hong Kong-based company. Now, that would be rather complicated. Now, we have talents to make sure that we make sure that there are international talents to support the industry. At the same time, we will keep training local talents. So we can't really look at the internal structure of the service supplier. Now, we have signed MOU with 2 internationally based insurance providers, and then we have included 10 of their courses in Hong Kong for local trainees. And so we'll keep doing that. The 8.25% threshold, free local employees in the company, that's not enough, of course. We're just setting the lowest threshold. We want to make it attractive. We want to bring companies to Hong Kong. When they come to Hong Kong, they will be hiring more local employees. Of course, we will closely monitor the situation, and if necessary, we need to improve the threshold in any way in future. We will certainly be prepared to consider it. Last is my turn. I'd like to thank the government for finally listening to the aspirations of the industry. I have actually commented many times that we need to offer more concessions to commodity traders. So that's why I very much support the bill. I have questions on 3 aspects. First one, the requirement to use locally based maritime services. Maybe it's a multinational enterprises setting up an office in Hong Kong, and then we use their services locally. Is there a requirement that payment must be made to the account of the company in Hong Kong? Or maybe the company could ask for payment to be made to the, say, the bank account of the headquarters of the company in London, for instance. So must payments be made to the account to a local account of the company? That's my first question. Second question, Schedule 17FF. It says that commodity trading does not include wholesaling and retailing activities. How do you define wholesaling and retailing activities? Trading among traders. Or I understand many transactions among traders are wholesale transactions in nature. So with this restriction, then many cases of commodity trading may not be able to enjoy the tax concession. So can you explain that? Third question is actually more a suggestion. From my own studies and surveys, I find that with LME, we have there are now over 10 delivery companies setting up offices in Hong Kong, but then they are not operating very well. Some are actually making a loss. Or both actually are making a loss. So apart from offering the half-rate tax concession to commodity traders, would you consider something else? Maybe with warehousing, logistics, and other aspects of commodity trading, you will offer also half-rate tax concession. I wonder if you will consider that. Maybe you can do more studies. Now, first answer the question about wholesaling and retailing, and the other is your suggestion. As for the making of payments, I will ask ROD colleagues to answer that question. Now, about wholesaling and retailing of a commodity in commodity trading with physical commodity trading, of course, maybe here we're talking about wheat or fuel. It's usually sold to a certain point. and then that's where the whole industrial chain starts. But then among types, say soybean, it's sold in supermarkets. If a certain place consumes a lot of soybeans, maybe a wholesaler may buy a lot of soybeans, and so when we talk about physical commodity trading, especially bulk trading, say a whole vessel full of commodities is not really for the purpose of wholesaling and retailing. And that's the restrictions we impose. And then, Chairman, you mentioned whether there could be a tax accession to the whole industrial chain. Well, I think I have to leave that to other policy bureau or even to the strategic committee led by the financial secretary. The proposed tax concession to physical commodity trading is just the first step. Hopefully we could help to expedite the development of the ecosystem. And as the ecosystem develops further, then there could be other policy support for other aspects of the chain. Now, let's say a commodity trader in Hong Kong import 100,000 tons of a certain product, and then the trader may sell 800 tons to Korea and some also to the mainland and so on. So it's initially one single transaction of commodity, but then eventually there's re-export of the commodity. Well, yes, we are in close liaison with the sector. We know that there is this element of being for procurement, but we learned that it's not the mainstream operation. So that's why we'll take the first step. First, we'll see how the market develops. If this procurement arrangement becomes a mainstream operation, and then of course we also have to give them support. Yes, so please do more studies on that. Thank you. Now I invite the IRD colleague to answer other question. The bill requires the commodity trader to use shipping services in Hong Kong or maritime services in Hong Kong. As for payment, whether it's paid to a local company or to a related company in the UK, it won't affect the commodity trader in applying for the tax concession. Yes, the local company provides a service, and whether the company receives the payment or how it receives the payment is a matter between this company and its say UK principal. And of course, the local service provider will have to include the income in the tax return, but it doesn't affect the tax concession for the commodity trader. Any other questions from members? If not, then we will start clause by clause scrutiny of the marked up copy. Now our meeting is scheduled till 12:45 today. The legal advisor on the in June has written to the administration. That's paper CB number bracket 21018/2026 bracket 02 is letter from our legal advisor to the administration dated the 26th of June. We were now waiting for the administration reply. And if members have no other questions, then we will first scrutinize the Chinese version of the marked up copy. Now, because the bill only amends the English version of the Inland Revenue Ordinance, so the legal advisor will remind us if there is need to also consider the English version. Now, if I may refer members to LC paper number CB bracket 2 1018/2026 bracket 01, as well as the that is the bill CB bracket, and also the bill CB bracket 2812/2026. So both the bill and the marked up copy. And as we consider the clauses of the bill, legal advisor, please remind us on points to note and relevant legal drafting issues. And if members wish to ask questions about individual clauses, you could press the request to speak button as the administration takes us through the relevant clauses. Now we invite the administration to take us through the bill clause by clause. Mr. Chim, please. Thank you. First, the long title of the bill. Members, please refer to C1313, page C1313. The bill is to amend the Chapter 112 in the Revenue Ordinance. There are two main parts. One is to enhance the existing tax concession regimes regarding the leasing of ships and certain other shipping-related activities that covers shipping lease management, shipping agency, shipping brokerage, and so on. And the second part is to provide for a new tax concession regime for certain commodity trading activities. And apart from the two main parts I mentioned, the bill also includes other minor textual amendments or related amendments. Now, Clause 1 of the bill. Short title. There's page C1313 of the Blue Bill. The ordinance may be cited as the Inland Revenue Amendment Tax Concessions for Shipping-Related Activities and Physical Commodity Trading Ordinance 2026 if it's passed by the Legislative Council or enacted by the Legislative Council.
Hey.
Any questions? Now I'll move on to Clause 2, Inland Revenue Ordinance amended. This states that the Inland Revenue Ordinance is amended as set out in sections 3 to 48. Alright. Now I will move on to the marked up copy. That's LC paper number CB bracket 21018/2026 bracket 01. And I will cover clauses 3 to 48. There is no amendment on page 1 of the marked up copy. Page 2 of the marked up copy. Clause 3 amends section 14. Charge of profits tax. We will amend 14 bracket 5 to expand the scope. With the 15% rate option for ship-related activities as well as the proposed half-rate tax concession for physical commodity trading, we will accordingly amend 14 bracket 5 to include 14P bracket 4B, bracket 4AB, 14T bracket 5B, bracket 5AB, 14ZD bracket 7B, bracket 7AB, 14ZM bracket 7B, bracket 7AB, 14ZV bracket 7B, or bracket 7A bracket B, or 14ZH bracket 4B, or bracket 5B. Now I come to first part of the bill, that is enhancing the existing measures for shipping-related activities. Under the current legislation, there are subdivisions 5 as well as other subdivisions. They are about ship leasing, ship management, as well as ship brokerage, and so on. The proposed amendment is to, based on the existing legislation, introduce enhancement measures. I will first talk about the qualified ship leasing activities. Let's look at page 3 of the marked up copy. It's about section 4 of the legislation. It is to amend 14.0 interpretation of subdivision 5 of division 2 of part 4. We will amend section 14.0 and expand the meaning of ship leasing. Under funding lease, we will remove the requirement of for a term exceeding 1 year. On page 4, we will amend the definition of operating lease, and we will remove the requirement of a term exceeding 1 year. And the other are minor amendments. Any questions? Yes, Dr. Ben Chen. Page 4 of the marked up copy. If the ship is leased to other people, that means the lessor will no longer be the owner, and who will be the party to make the registration? Well, legally speaking, will the lessor still be the owner? Well, under this clause, owner here means the ship lessor. And the ship lessor is granting the ownership to another person, and the person who is granted the ownership will be the owner of the lease. That means ship lease lessee. Say a lessee is using this ship, and legally speaking, will that lessee be regarded as an owner of the ship? Here we're talking about the definition of operating lease. The owner here refers to the owner of the ship. That is the legal owner of the ship. There are Roman numerals 1 and 2. Roman numeral 1 refers to the ownership being granted to the lessee, and Roman numeral 2 is about the sublease. That means the head lease or head lessee could sublease the ship to another person. So the ship lessee cannot be regarded as the ship owner, is that right? Correct. Please move on. Now I come to page 5 of the marked up copy. We will remove 14.0 bracket 7b. For ship operators, we remove the word business from the definition. The other amendments are technical amendments. We are amending the punctuation marks here. Principal Assistant Secretary, you forgot to explain about the sublease. For bracket 4, we are going to introduce sublease. This is a new part after we have removed the original operating lease definition. Any questions about sublease? If not, please carry on. Please refer to page 5 of the English marked up copy. On ship operators, we have amended the punctuation mark. Dr. Ben Chen. A ship can only be subleased to one person or more than one person. Would there be sublessee 1 or sublessee 2, or are they all known as sublessees? Under the tax concession regime, if there are more than one sublessee, would this make things more complicated? Administration. I thank the member for the questions. There are head leases and subleases. For a sublease, it means a ship is subleased to a person. It doesn't matter if the ship is subleased to more than one person. This is because the proposed regime targets the ship lessors, not the ship lessees. So this will not affect how the tax regime operates. You talked about sublease, and please talk about the head lease. Specified head lease means an arrangement that falls within the description in paragraph A1 of the definition of operating lease. Please move on. Now we come to Clause 5 of the bill. It is to amend Section 14P, Concession for Qualifying Ship Lessor. That's page 6 of the marked up copy. We will amend Section 14P of the IRO. We're introducing this 15% additional option for qualifying ship lessors. On the basis of having a 0% tax rate, enterprises can opt to use this 15% tax rate. We will also amend bracket 1A. Qualifying ship lessors that meet the requirements can, in accordance with Schedule 8D, enjoy a 15% tax rate. Under Clause 43, we will introduce this Schedule 8D. The other amendments are consequential amendments and technical amendments. Well, please talk about ship operators in the English version. Page 5 of the English marked up copy. As mentioned, we are amending a punctuation mark here. We're adding a period or a full stop here. Please carry on. We're now at page 7 of the marked up copy. Qualifying ship lessors can enjoy a 0% tax rate or 15% tax rate, and this part talks about how they can switch between the two. The core of this is to provide alternatives to qualifying ship lessors. We're introducing bracket 4A here. For those who opt for the 15% tax rate, they have to meet 3 requirements. First, the central management and control of the corporation is exercised in Hong Kong. Second, the activities that produce the qualifying profits are carried out in Hong Kong. And 3, those activities are not carried out by permanent establishment of the corporation outside Hong Kong. Also, the corporation will have to elect in writing say the enterprise is asking for legal service, and if they ask their in-house lawyer that within the group to provide the service, would that be considered as a service outside Hong Kong? This is targeting ship leasing activities. Dr. Ben Chen. Bracket A2, A and B. What are the differences? carried out in Hong Kong by the corporation and arranged by the corporation to be carried out in Hong Kong. What is the difference between the two? Arranged by the corporation means the corporation can pick an agent or a contractor to carry out the business or service, and the location will have to be Hong Kong. That means a company can arrange for an agent to carry out the business or transaction for the company. Yes. An agent or a contractor can help carry out the business, but the contractor or the agent has to be located in Hong Kong. Please carry on. Page 8 of the marked up copy. We're introducing subclause 4B. It is to effect the 0% option only under two conditions that this option will not happen. That is, does not satisfy the relevant requirement, or the corporation picks the 15% option. Page 8 of the marked up copy also introduces a new subclause 4C. And this is about situations where the corporation elected a 15% tax rate, but it does not work. Legal advisor has a question.
Thank you. Now on 14P, paragraph B and C, we have actually asked questions of the administration. That is, whether the corporation can elect multiple times their profits tax in the same year of assessment, and then as the corporation makes an election, is it possible that after a certain point then the election is irrevocable? That's why paper CB bracket 2 1018/2026 bracket 02 is paragraphs 4 and 5 of the paper. We know that the administration has not yet given a written reply, but can you explain that orally here briefly to members? Thank you. Thank you. Thank you for the question. Now, once the corporation elects concessionary tax, then it's not irrevocable, and the corporation may not may not exit from this tax concession arrangement. But in the next year of assessment, the corporation may elect a new, different type of tax concession. So, in designing the amendment bill, this actually reflects our legislative intent. Under the existing Section 74A of the Inland Revenue Ordinance, the taxpayer, the corporation may contest the IRD assessment, and then IRD will, in accordance with its administrative guidelines, make the necessary arrangements. And after the bill is passed into law, then we'll ask the IRD to update its administrative guidelines to state specifically what the mechanism is. Thank you. Please continue. Page 0008 of the marked up copy. We also amend the existing 14P bracket 5 and bracket 6. That is, once the corporation elects either 15% or the other tax rate, then it must stick to the same tax rate, and in the same year of assessment, it cannot elect two tax rates. And if a particular year of assessment, the concession tax rate does not apply, even if in the previous year the corporation has enjoyed the concession, in the next year it cannot continue to enjoy the concession, and it has to go by the existing profits tax rate at 16.5% for tax assessment. Page 0009 of the marked up copy, 14p bracket 7 bracket B and section 14p bracket 8, we have added or bracket 1a. It's because we're adding the 15% concession tax rate. So it's a consequential amendment. Thank you. Please continue. Clause 6 of the bill. Section 14pa added after section 14p. It's page 0009 of the marked up copy. For calculating assessable profits of corporation derived from qualifying tax leasing activity, we state how we can calculate the assessable profits in relation to 0% or 50% of tax rate. And the new section 14PA states the calculation of assessable profits. That is, ship lessors may use the cost of may apply the cost of ship leasing or ship acquisition. And then we have the new 14R. That is, leasing is considered part of the income, and then 14RI, and then income of other leases, and less that is the 14RB. So we deduct that, and then that's the amount arrived at. Clause 7, amending section 14Q, allowance for capital expenditure on ship. So we'll amend section 14Q bracket 1. That is 10% or 8.25% of tax rate, and then under pursuant to 14P, and so that then we now include 14P1, and we state the conditions where the concession rate does not apply. Okay. Now clause 8. Section 14R repealed, calculation of the net lease payments for operating leases. It's page 0013 of the marked up copy. The current arrangement is qualifying ship lessors. If they engage in ship leasing activity, they enjoy 0%, or they could also enjoy the 20% tax concession. So if they elect 0% tax or the 20% tax base deduction, then the effect is minimal. But then we now introduce a Hong Kong minimum top-up tax, so the 20% tax base will be a tax concession without a strong justification, and there could be permanent differential. So then the effective tax rate will be lower than 50% for multinational enterprises, and then they will have to pay the top-up Hong Kong minimum top-up tax. And so that means the 20% tax base won't carry any effect. It will not bring about any tax concessions for enterprises. So we want to make sure our tax concession measures meet the international standards. So we will therefore replace this 20% tax base with the new ship acquisition cost tax deduction. Just now in clause 6 already we've covered the reference tax deduction. Thank you. Please continue. Clause 9 of the bill. Sections 14RA to 14RI added. Clause 9 is lengthy. If that's the case, perhaps we'll leave it to the next meeting, okay? If other members have no objection, then I will declare the meeting closed today. At the next meeting, we'll schedule a time for the next meeting with the administration, and then we'll let you know. Okay? Thank you for officials for coming to this meeting.